What is up, everybody? Mikkel Hayden here again with another news video, going over some financial news that's come out recently that could impact us one way or another. So let's go jump right into it. So, first up, we are going to talk a little bit about the conflict over in Israel. The big thing in finance news around that is cryptocurrency. How cryptocurrency is being used by terrorist groups to amass funds, and specifically how Tether, one of the larger companies in the crypto sphere, they provide a stable coin, which is a type of cryptocurrency called Tether as well, that kind of follows the value of the dollar so that people in other markets that wouldn't normally have access to that, they can get that through Tether and the cryptocurrency blockchain. Tether has been helping authorities in freezing cryptocurrency accounts related to those terrorist groups, and their efforts have helped seize accounts worth around $835 million. So they're actually being a huge help in stopping those terrorist groups from amassing more funds. And it actually speaks a lot to a big misconception around cryptocurrency. A lot of people think that it's anonymous. You can make any transactions you want and it can't be tracked back to you. When in reality, those transactions can be tracked back to you very reliably since everything's recorded. Every transaction is recorded on the blockchain and it can be traced back very easily. Tether's CEO actually said the following regarding crypto transactions. Contrary to popular belief, cryptocurrency transactions are not anonymous. They are the most traceable and trackable assets. Every transaction is recorded on the blockchain, making it feasible for anyone to trace fund movements. Consequently, criminals foolish enough to employ cryptocurrencies for illegal activities will inevitably be identified. Tether stated that they'll continue working with law enforcement to freeze accounts as they find them and continue to help out in whatever way they can in that regard. Next up, we're going to talk a little bit about mortgage rates, home owning, and where the housing market's at right now. Recently, rates have been rising slowly. They've been in that 7% range, but they're ever increasing towards that dreaded 8% range, and that comes with its own consequences. First of all, homeowners are less likely to sell. They're afraid to lose their currently lower mortgage rates for a higher one if they were to sell and then purchase something else. And because of that, the supply of housing is actually going down. Because of these higher interest rates and that decrease in supply, it's making it difficult for those first time home buyers to, one, find a home at all, and two, find something that they like with such low supply. Not very many options out there. And then third, a house at a reasonable price still. House prices are up since supply is low, and that is just adding on to the difficulty for those first-time home buyers. On top of these current struggles, the most common reason for being denied a loan in the last year has been due to insufficient income, as income hasn't been increasing nearly as fast as mortgage rates, and in relation, forecasted monthly payments on those mortgages. All right, now let's talk about some staggering numbers related to retirement funds. There are some shocking numbers when we're looking at what the average amount of savings Gen Xers have for retirement and how close they're coming up on that retirement age already. For reference, Gen Xers are those who are in their 40s to 50s, and so they're already pretty close to that retirement age. And the numbers that I'm going to share with you are drastically lower than you'd be expecting when you're getting that close to retirement. The National Institute on Retirement Security show that Gen Xers on average only have 40,000 in retirement savings in private accounts, and an average of about 150,000 in 401k accounts, according to Fidelity Investments, one of the largest providers of 401k plans nationwide. Between those two accounts, we can see that Gen Xers are only at about $200,000 saved away for their retirement, which is well below what they should be expecting to have by retirement. These shortcomings in retirement savings are estimated to be due to the rise in both healthcare and education costs, as well as the rising student debt overall. Plus, on top of that, the spike in inflation has raised prices everywhere. Due to inflation and in an attempt to get back on track, Gen Xers, among others, are taking action. Some ways include cutting spending on dining out, spending less on or even canceling vacations altogether, and even cutting spending on essentials like groceries or gas. As we can see, there's a lot to be done to get back on track for Gen Xers, as well as a lot of things you can be doing if you're just starting out saving for retirement. As always, there's a lot going on in the world of finance. We try to stay on top of it and stay on top of the news and review articles as they come. But as always, thank you guys for watching. If you liked the video, leave a like, hit the subscribe button to stay tuned for next week's video, and we'll see you next time. Thank you.